Most people invest in the stock market because it feels safe. But here's the truth. You live and you die financially by the value of your stock. If it goes up, you celebrate. If it goes down, you panic. But when it comes to real estate, the value doesn't even matter. And I'll show you why real estate makes all the difference. You see, there are a million real estate versus the stock market videos on YouTube. But in this video, I want to take a completely different angle and explain to you why real estate is the only thing you should be investing in, definitely over the stock market. And the best part is, this isn't just theory. I bought over $50 million worth of real estate that I still own today, and I've dabbled in the stock market. So the analysis I'm going to give you is based on real life facts. The fatal flaw of stocks that I don't see enough people talking about, in my opinion, is the value of the stock is the end all be all. And this isn't necessarily the stock market issue. One of the positive and negatives about owning stocks in the stock market is they are priced every single second. Real estate, on the other hand, is only really priced when it's bought or sold. Stocks are priced every single day, every second of the day. And if your stock drops 20, 30%, which is not super uncommon when you're owning individual stocks, you panic and most people end up selling. You can pretend that you didn't or you won't, but most people do. You have no control, you have no leverage. The stock is the stock, the price is the price, and you can't do anything about it. And in fact, 84% of daily stock traders underperform the market because of exactly what I just mentioned. They panic and they go off of their gut, not off of the numbers. In stocks, the value is the investment. In real estate, the value is just one of the many ways it creates wealth for you. Speaking of real estate, it has 4 wealth creators, not just the value. And before you get all puffed up, I understand dividends are a part of owning stocks, but not all stocks actually pay them, and most of the ones they do pay aren't enough to move the financial needle at all for you, especially if you own just a few $1,000s of that stock. A few $1,000s that you had to pay in cash, by the way. More on that later. Number 1, you get cash flow from owning real estate, meaning you make money now. Again, you can get cash from your stocks in the form of dividends if that dividend even gets paid out if the company performs or if that stock even offers it. But when you own real estate, obviously assuming you know what you're doing to a certain degree and either have a property management company managing the property for you, or if you're doing it yourself and you ran your numbers correctly, you will cash flow every single month. Now, this is one that I would say has the least benefit because cash flow, owning real estate, is not really that impressive. I cash flow $200 to $300 per door on my portfolio. So it's not very much if you own 5 or 10 houses, you're gonna be cash flowing $1,000 or $2,000 every single month. However, it is consistent and it doesn't take away from the investment. You also get appreciation or value, similar to stocks, except with real estate, it's not priced every single day. In fact, the value doesn't really matter. If I buy a house that's worth $250,000 and in 5 years it's worth $400,000 and in 6 years it's worth $370,000 and in 7 years it's worth $410,000, it doesn't matter. If I'm not looking to sell it or refinance it, the value can do whatever the value is going to do and I'm not gonna panic because I know for a fact that real estate doubles in value every 15 years. So in the long run, my appreciation, my value growth in my real estate goes up. I don't care about the minute dips or even the high swings. I don't have to, I'm not required to do anything. On the other hand, if you own stocks and it does end up going down, that panic sets in and most people end up selling or at least worrying about potentially selling. I don't like to worry, especially about my money. Because I have my money in real estate, I don't really worry. Number 3 and number 4, stocks can't touch. You can give them maybe a little bit of playing time in number 1 and number 2, but number 3 and 4, they ain't part of that game. Number 3, debt pay down. One of the beautiful things about real estate I can break down more and I do all over this channel is the fact that you use little to none of your own money to buy it. If you want to own stocks, you have to have that much cash to buy those stocks. If you want to own real estate, you need a very small percentage of that cash or none of that cash. So naturally, if you borrow money to buy real estate, like most investors do, you're going to have a mortgage on the property. However, the tenant's rent pays down the mortgage. So you not only get property value growth, I guess the stock goes up too, but you get debt pay down at the same time. You don't get that with stocks. So you're getting a double whammy, to give you a very technical term. Property values go up, the tenants pay the mortgage down, and your equity, your net worth grows without you doing anything. And last but definitely not least is tax benefits and tax savings. You don't get any tax savings for owning stocks. You do get a crap ton, for another technical term for you, of owning real estate. Between depreciation, 1031 tax exchange, write-offs, accelerated depreciation, you can pay little to no taxes on your entire income by owning real estate. In fact, I do pretty well for myself. I probably make less than some of you think, and maybe more than some of you think. Regardless, I don't pay taxes on any of my active businesses because of the real estate that I own. It allows you to not only not pay taxes on the gains in your real estate, it can allow you to not pay taxes on the gains in your stock or your actual W-2 income. You see, real estate tax savings can trickle all the way down to your personal income on your tax report. So tax savings are a huge reason why a lot of wealthy people end up investing in real estate. They don't care about the cash flow. They don't even care about the appreciation of the property. They only care about the tax savings that go along with it. You can't say that about stocks. When the stock drops, no tenant, no rent, no tax break, just red. All right, now let's talk leverage, because this is the number one reason why real estate absolutely crushes the stock market. I know I probably said that a few times in this video, and I know I gave you a ton of other benefits 1 through 4. However, the fact that you can use none to very little of your own money to own real estate assets is an absolute game changer. If I want to buy $500,000 in stocks, I have to have $500,000 in cash. If I want to buy a $500,000 rental property, I can either put 20% down, $100,000 down, and still control that $500,000 asset, or I can get creative using the BRRRR method or creative financing or a few different other strategies and own that $500,000 property using none of my own money. I know that because I own $51 million worth of rental properties using none of my own money. Leverage is the name of the game. I mean, think about it. Most people don't make enough money to save enough money to live well and have enough money left over to invest enough in the stock market to make a financial impact. Yes, the stock market is told to double in value every 7 or 8 years. However, you have to put in enough money to make that substantial. If you're putting in $2,000 or $3,000 into the stock market every year, good, that there's nothing wrong with that. But every 7 or 8 years, it doubling in value and you're adding to it is going to give you tens of thousands of dollars. That's not a horrible thing, but that's not enough money to make a financial impact on your life. But with real estate, you can use, again, little or none of your own money to buy multiple properties and to buy millions of dollars worth of real estate. 90-something odd percent of banks or lenders will not let you borrow money to buy stocks or borrow on the margin. It does happen with professional investors, but it's still extremely risky. That's why banks don't do it. When on the other side of the coin, small local banks will fight over your business because they understand the value and quality of that loan. Your ROI on stock market investing is capped on how much cash that you have. Your ROI on real estate is capped on how much money you can borrow. There's a big difference there, and if you don't understand that difference, you need to. I talked a little bit about this earlier, but I want to dig just a little bit deeper. The value of your real estate absolutely does not matter at all, especially in the short term. The value of real estate is not checked every single day, as I mentioned. It is only checked if you're looking to transact on that real estate, which is going to happen once, maybe twice a decade. You decide to sell it, or you decide to pull out some of the equity gain when the property went up and the mortgage was paid down and there's going to be equity there. But if you're not looking to do either of those things, the value does not matter. You don't have to stress every time the Fed does a meeting and talks about rates or the earning reports from a certain business that you're investing in comes out. You don't have to be sitting on pins and needles and hoping it's a good report or the Fed does something with rates. If you already have a loan on a property that's fixed, it doesn't matter. Of course, prices may dip, and they do dip occasionally during a real estate dip or real estate recession. But if you're still collecting rent like we did during COVID, we still collected 98% of rent, and like we have been over the past few years, even though the market's been down a little bit, it doesn't matter because you're not doing anything with the property even though the value went down. You're still collecting rent, and you're still making all your payments, and you're still getting the debt pay down. Maybe the top line, your value isn't going up as quickly or slightly going down, but you're still getting the debt pay down, you're still getting cash flow, and you're still getting tax savings. When the value of your stock goes down, you're screwed. In fact, in the last 25 years, so in this century, real estate has only majorly dropped one time, and that was 2008 to 2010. But by 2012 and 2013, it had already recovered. And if you owned real estate during that time, it didn't affect you at all because you were still collecting rent, because people still needed to rent, and people, for the most part, still had jobs. You're able to still collect rent and not have to sell the asset, and eventually it's going to double in value. If you own for at least 5 years, you're almost guaranteed not to fail, because time, leverage, and rent will guarantee your payment and guarantee your net worth. And the stock market pays you less often, which is not a good combination. Most stocks, you either get the growth or the dividends. You very, very rarely get both. And dividends, for the most part, tend to be 1 or 2%, maybe 3%. So if you have $10,000 worth of a stock and you don't take the equity growth, you will make $100 to $300 that year. And $10,000 worth of a stock is not a small amount. Or you take the growth and you get no cash flow. And a huge thing that I did not talk about enough in this video, I'm going to mention it now, is your lack of control. You have no control over that company that is based on that stock. You're not sitting on the board of whatever company you're investing in. But when you own real estate, you are the president, you are the CEO, you have full control over what to do. You can decide to sell it, you can decide to refinance it, you can decide to keep it, you can decide to bring in a partner. You can do whatever you want. You can keep it as a long-term rental. You can end up making it a midterm rental or a short-term rental, or you can go the Section 8 route. You have control of that asset, so you have control of your financial future, unlike the stock market. Stocks maybe pay you in hope, real estate pays you in math. Real estate pays you 4 ways, while the stock market only pays you 1. Leverage is your friend in real estate, and it's not in the stock market. The value of your real estate doesn't control and own you, while the value of your stocks does. You have control over your real estate, and you have 0 control over the stock market. And the best part is you don't even need your own money to start investing in real estate. That's why I built a $50 million portfolio investing in real estate and own $0 on Amazon stock. You don't need to guess the market, you just need to understand the system. Real estate wins because you win even when the price doesn't. Hopefully you learned a little bit about real estate in the stock market and are excited to invest in real estate. If you want to learn more about how to invest in real estate, make sure you hit that like button, subscribe, check out the description for some more freebies, and make sure to check out this video over here where I talk more about real life real estate investing. And don't forget to subscribe to our podcast, The FasterFreedom Show. See you on the next one. Peace out.